Is it okay to move it into a startup account, being one of the, rising neobanks? I don't want to name names because I don't want to pick any out specifically, but is it okay to do that, or that not okay and I shouldn't do that?
So I think you can do that. And those startups have beautiful abstraction layers on top of underlying banks, meaning they're beautiful, they're easy to use. The account opening process is probably super easy to use. And so I think that might be a great option for Monday. But then I'd actually go and I'd look at what's the underlying bank that supports that entity and decide whether you want to have your money sitting at that bank. And so I actually, I think it's worth doing whatever you can to create account diversification. Me personally, I would move to a systemically important bank or a strong regional bank. Or if you have local accounts that you need at different local banks, like we run a bank in Kansas City, our depositors are really sticky. Our client base is super sticky at Lead Bank. And so we look at our situation, our liquidity situation. And, I'm not worried about our local clients in Kansas City, reading Twitter and having like you're too invested in tech bank run on Monday morning because of the way we're highly diversified. And what they're invested in and the way that our loan portfolio looks. But I do think it's worth looking at your account structure and saying having diversification of accounts and just having them open and have them funded in a small amount is a great option. Working with one of those abstraction layer companies might be a great option to have it immediately available and super easy to use. But, if it were me, I would be moving money to Citigroup, JP Morgan, Truist, those kinds of companies, but that's me personally.
I totally get you. Okay, so we've got those accounts. The other question is, Harry, what if withdrawals get halted before I can withdraw my money out? Is there a chance that withdrawals get halted before people can move money in whatever bank from a crop?
So there is. I think we saw that on Thursday and Friday with SVB. People have wires that said approved and then the money never came out. Having said that, there are payments coming out of SVB. It could be ordinary course bills, it could be payroll movements. And so there was money moving on Friday. And so there is probably billions of dollars that were in process before the FDIC kind of struck the chalk line in the moment when they took over. And so you can get stuck, and that's what the FDIC is trying to unstick.
A final one on the founder must asks. I've had a couple of founders be like, hey, is it okay to move to my personal accounts because I haven't been able to open accounts? And they've been told that on trust, I don't quite understand, I'm not a lawyer, but on trust, it's okay for a split amount of time to move money to your personal accounts. Is that okay?
So I would work like hell on Monday to open up an account somewhere. I wouldn't find that to be okay, but there are a lot of dynamics around moving money out of a corporate entity into a personal entity that I would be very cautious about, and I would work my damnedest to get the money into an account. You actually can get an account set up in a day. We've been doing it this weekend for folks with our team sitting in Kansas City, opening up some corporate accounts for people that we have worked with and are, in process with. And so you can actually get banks to open up accounts so that you can move money, or, BlackRock and any kind of account that might be a money market account, things like that. But I would try to keep the corporate corpus whole and managed from a corporate entity point of view.
Neither Jackie nor I are lawyers, but no doubt that their auditors, any founders' auditors and their tax advisors would highly recommend against intermingling their corporate monies and their personal monies.
Kris, I'm sorry, your face when I said that, I was like this, like a ghost had really gone in the room. That said it all, honestly. When your advisor looks like that, you're like, okay, that was a bad idea.
Imagine saying I kept my money at, PacWest or Signature or First Republic and nothing happened, but I moved it into my personal checking account. And I'm sure the person would take a screenshot, take another screenshot, move it back. But like, you'd have to sit there in retrospect and say, really, you're moving corporate money out of your account into your personal account? Like, and so I would open up an account immediately at some other bank. I'd open it up at like an abstraction layer kind of company, like a neobank, you know, something that gets you immediacy around account openings that's a little bit more contained and trusted and managed than a personal account.